All right, everybody, you got me. I mean, seriously, I love all of you. I mean that, and I will not ever let you down. My email box lit up like a Christmas tree. Greg, please do a follow-up video. Greg, please do a follow-up video after today's pretty epic sell-off in the stock market. Dow down about 650 points. A lot of you are worried, rightly so. I want to talk about that. I will talk about it. I did write an article here. I want to read to you. It's available on my Steam It blog. Go over there when you're finished and run off a copy for yourself. Pretty interesting stuff here. Basic, about one page altogether. I printed it out kind of big. So let's talk about a few things here, people. So yes, stocks got walloped today. As a matter of fact, it's a historic day. We've never had a percentage point sell-off this large ever in the stock market on a Christmas Eve. Okay, and today actually is supposed to be the start of the Santa Claus rally. Well, I guess Santa's not coming this year. Let's back up and put a perspective on what's going on. We know now for months we had the good cop, bad cop routine between President Trump and the Federal Reserve. Don't raise rates, don't raise rates, don't raise rates. Then it seemed like the Federal Reserve capitulated with Powell was like, well, you know, we're very close to a neutral rate with regard to raising rates. The market kind of really liked this. It seemed in a way that the Federal Reserve kind of capitulated to the president. I called this phase one. I also called it the Trump-Powell put. Remember that? Okay. Market really did like what came out of the Federal Reserve's mouth at that point. And phase two, and this is exactly how I put it. I put phase one and phase two. I said phase two needed to be some kind of a real trade deal between China and the United States. Well, we got this truce, which the market initially liked. I myself even called it phase two because I was kind of led askew. Let's talk about that. Phase one, again, the Trump-Powell put. That was a setup to get the market to move higher. Then a story got floated out, turned out not to be true, about a China trade truce. Well, when the market found out that there really wasn't a truce, that was it. Stocks really started to sell off. So we never really got stage two of that plan I had said I expected to happen. It's an incredible situation here. So we had stage one complete, stage two didn't happen. Then we got this hike from the Federal Reserve. It's not even a hike. I mean, look, all you got to do is have a click. Did rates go up? Has the yield curve steepened, or have yields gone up at all since the Federal Reserve made the announcement that they were going to hike rates? No. They've actually gone down, and the yield curve continues to flatten out. So people can sit here that have no clue and believe that it's a rate hike that affected the stock market. Wrong. It's not a rate hike that affected the stock market at all. It's these distortions that are starting to become real. I mean, I can't cover this any more than I have. We are slowing down on a global level. Industry here in the United States falling off of a cliff. So how can we possibly maintain a stock market which is in financial fantasy land? Now let me read this to you. The article I wrote is on Steam It right now. And as a matter of fact, I'll put a link to this article in the description of this video. Please go read it. But I'm going to read it to you here. Stock market. Where is the bottom? Dow 3000 is possible. Dow 3000. That sounds pretty epic. Well, follow along with me here. Let me know what you think. Stock market, under my lovely photo. Stock market, where is the bottom? Simple. In the midst of the last financial crisis in 2008, the Federal Reserve stepped in with quantitative easing. You know, we had that credit freeze. The Federal Reserve had to do something to unlock the credit markets. Otherwise, if you would have went to your bank, done. No cash, no transactions. That's it. So, and I have said publicly, the Federal Reserve needed to do something to unfreeze those credit markets. Otherwise, Mad Max scenario, for which we're going to face a new one. Okay, so where was I? In the midst of the financial crisis of 2008, the Federal Reserve stepped in with quantitative easing. And that is an unprecedented buying of assets, the likes of we have never seen in the history of the world. This happened at Dow 6000. Dow 6000, that's what stopped the bleeding. This Federal Reserve buying spree at Dow 6000 actually created an artificial floor under the stock market, and where the real bottom was at that time, simply no one knows. Next page. That's the truth. I mean, the Fed stepped in at Dow 6000. If the Fed had not stepped in and unfreeze the credit markets or whatever they had to do at that point, who knows where the real bottom would have been? It's utterly, completely insane. So here we go. Today, referring to now, the economic environment and stock market valuations have an absolute zero correlation with reality at the present time. I would be willing to bet that most of you here will agree with me. So, very simple. We understand that a hard floor was created by the Federal Reserve managing of the stock market at Dow 6000. Since that time, every single world central bank has followed suit, creating a fake financial environment which has manifested the largest, in terms of magnitude, distortions ever to be seen in the history of the world financial markets. Unless you live under a rock and you believe everything is real, this is absolutely factual. Here we go. Understanding that an artificial floor was placed under the U.S. markets at Dow 6000, and where a real bottom was, no one really knows. It is not unreasonable to understand that a retest of the real low, whatever the Dow would have been at that point, is a possibility. Okay, so where is that real bottom? Well, we all know it's below 6,000 because that's where the Federal Reserve stepped in and started faking the markets. So if we know that the real bottom is below 6,000, I say to you, Dow 3,000 is a real possibility. Now think of what that would mean for you, for your investments. And let me put another light on this. You know, people have been talking about a slow motion kind of train wreck, which we've been watching kind of grind for a while here. But if you've noticed, we're getting these big precipitous drops. Let me just say this too, that is concerning. The difference between what we're seeing now and what we watched in 2008, there was one significant difference. If you recall, as the markets were melting down in 2008, we had a drop, and then we had at least a little bit of a surge higher, then a drop, and a little bit of a surge higher. We're not seeing that here. We're getting drop, 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 drop. We have a lot of algorithms that are triggering here. We saw that today in the markets. Dow was down 300. All of a sudden, simultaneous buying occurred. This is all the algorithms, all the institutions that are using algorithms to trade, triggering at the same time, buying, and then what happened, they all triggered again and sold off. If you notice, there wasn't any buying towards the end of the day. A massive skewing of sell orders. So, I want you to understand where we are. We have literally, again, there's no other way to put it. It's too unbelievable, honestly, for people to think that the environment we are in is real in any way, shape, or form. How every world central bank has manifested this on purpose. Now, here's my take on a scenario that has the potential to unfold. And I was just talking to a very good friend of mine about this recently. Just, I don't know, maybe an hour ago. People do not act unless there is a reason to do it or panic in the markets. Now, you understand that I have said there is a way to fix this. a few things have to fall into place to stop a full-on meltdown. If what I'm about to say again does not happen, we are going to face a worst-case scenario, and it's going to be worse than we even think. The fact that Mnuchin this weekend approached 6 of Wall Street's largest banks, their CEOs, to discuss something behind closed doors, that should be a big tell that something is wrong. And what you're being fist-fed about this being great, and our economy is strong, and our markets are strong, are just lies across the board. So, I said recently that in order to stop a worst-case scenario, for which there is going to be an enormous amount of pain, no matter what happens, people are already suffering. I mean, I personally know of people who have lost a third of their 401k plan already in just the past month. So can you only imagine what will happen if this continues to accelerate, if selling continues to just feed on itself lower and lower and lower, and we hit Dow 3,000 or below 6,000? No one knows where the real bottom is. Is it Dow 1,000? I mean, I know I'm getting crazy here in extremes, but the market always overshoots. The market is an overreacting mechanism. That's how it overreacts to the upside. It overreacts to the downside. That's the truth. But the scenario is pretty simple. Gold needs to be revalued multiples higher than it is currently. Then we need to take the US dollar and back it with a fraction of gold. That's phase 1. Phase 2, and it has to be simultaneous. So phase 1 and 2, 1, revalue the gold. 2, back the currency with a fraction of gold. So now it's worth something. It can't go to zero. You understand? The way the currency is now globally, all of the world's fiat currencies have the potential to go to zero. If we back it with a fraction of gold, it cannot go to zero. We revalue gold multiples higher than it is now. We've done this before. Gold has been revalued in the past under extreme circumstances. So, if panic starts to set in and we start seeing this bleed off, the dollar's bleeding, look what happened today. The safe haven asset, the dollar, got bled to death pretty much today, and it's not going to stop, in my opinion. Are we going to get a bounce? Maybe. Stock market's not bouncing. Where are you going to hide? Where can people go right now? You know my take. I've been explaining to you for years, bet against the debt and become your own central bank. If you have listened to me for all this time, you're in a pretty good spot right now. I would like to think I'm in a pretty good spot right now. So, again, revaluation of the gold, multiples higher. Backing the currency with a fraction of gold. Number 3, we got to do something with the debt. The debt right now is worthless. You see the yield curve flattening out? That's telling us, it's dictating the value of the debt via the yield. You understand? So, rate suppression, continuing to suppress rates, or even going negative right now, will only exacerbate the problem. That's the entire issue, okay? So, and we've seen this before, and I would not be surprised to see this happen. I would not be surprised to see the Federal Reserve go negative. If Federal Reserve goes negative, it will destroy the stock market. I'm going to tell you right now. Either way we look at it, stocks are going to suffer, people's investments are going to suffer. The fake engineered environment we have by artificially suppressing rates has inflated bubbles. These bubbles are going to correct to fair value. That's the only job of these markets, is to determine fair value. It's that simple. All right? Suppressed rates have created distortions, again, of magnitudes, like I outlined in that article, that are off the Richter scale. So, phase 3 needs to be a dramatic raising of interest rates. Has to happen. Okay? So, revaluing gold, backing the currency with a fraction of gold, and raising rates dramatically. If these 3 things don't happen, worst case scenario, Dow 3,000. Either way, we're going to get hit hard. Markets are going to get hit very, very hard. I don't think we've seen anything yet. These may be just the opening salvos here. And if the Fed tries to lower rates or tries to start to talk more dovish, that's going to inject an element of uncertainty into this market. There may be initial knee-jerk reaction higher, but it will drop again. The drug has now become toxic. The drug being quantitative easing, the drug being easy money, the drug being suppressed interest rates. So our president can scream all he wants about what's going on, but rates have not gone higher since the Federal Reserve has said anything. He's smart enough to know this. Now, there is a possibility that our president is setting something up, something good, believe it or not. I know a lot of you are going to freak out about what I'm going to say. I want the president to be successful. You all know that. But he's played a lot of his cards either wrong or he's waiting for something to unfold. And this is what I want to end off with. I know this is getting kind of long. Once panic sets into the market and people realize something has to be done, let's say the Dow drops another 5,000 points in a matter of a couple of weeks or a week, whatever it might be, we could hear some kind of a presidential special report come out where President Trump says, to stop the bleeding, we need to, well, let's see, maybe President Trump is watching this video right now. We need to revalue gold, we need to back the currency with gold, and we need to raise rates dramatically. It would take the world by shock and by storm. Okay? Bleeding in the stock market would be significant, but it would rebound at one point. It wouldn't hit Dow 3000, I don't believe. Dow 3000 is a real target if things are left the way they are. And if, God forbid, the Federal Reserve decides to go negative with regard to interest rates, killing the value of the debt worse, killing the value of the currency worse, you understand? Can't happen. So this scenario has to occur, the one I just said, in order to stop a worst case scenario. I really sincerely hope that this video, I went out of my way today. I was leaving. Look how I'm dressed, okay? To go out here. But I feel committed to you all. You're all on my team. And this guy here, see the color of this kind of red? I mean it. I love all of you out here. So do this guy a favor. Get this video out. Share this as far and wide as you possibly can. Every one of your social networks. Go on Market Watch. Create an account. Create links. Whatever you got to do to get this video out so people can hear this scenario and how this really needs to happen. And it needs to happen now. So please, if you're on my team, I am counting on you. And I would never let you down. So don't let me down either. If you think this is important, could always use a thumbs up. It makes me feel happy, like I'm doing a good job. And number 2, share this video. All right? Again, I'm going to leave you all off with have a very Merry Christmas. I love all of you. Love each other. Care about each other. And be charitable. I am signing off, and I will see you Wednesday. Again, I love you all.